Hello and welcome back to the Clean Techies podcast, where we interview climate tech founders and VCs to discuss all things building and investing to solve the biggest challenge of our generation, climate change. Today we have a slightly different conversation. We are joined by Brittain from Insurtech Gateway. And despite the name, it's not an insurance company. What they are is an incubator for companies helping solve risk issues. So think of new category insurance startups or products, i.e., you see a new way to solve flood risk from climate change. You could go to Insurtech Gateway to help you incubate that business. On the back end, they also write venture investments at the seed or Series A level, sometimes pre-seed as well, and have strong partnerships with other venture investors as well as insurance providers to help achieve the outcomes desired through partnership. As a heads up, this conversation is a lot higher level in nature for the majority of it, but towards the end, we hit on some more specific topics. So if that's what you're looking for, maybe some more advice for you building a company like this, you might skip ahead towards that. But without any further delay, enjoy the episode. All right, welcome to the show, Stephen. How are you doing today?
Very good, Silas. Thank you very much for inviting me.
Yeah, super glad to have you. Where exactly are you calling in from?
Exactly. In the post-lockdown working from home sense, I'm sitting in a room at the north side of my house in West Sussex, Horsham, England, United Kingdom, Europe.
Very nice. How is the weather over there? I always give people crap for the weather in the UK.
It would be deserved today, I have to say. It's pretty desperate. It's because it's Wimbledon week, and we're coming close to the finals. It's the women's finals today. Therefore, the weather will change about 4 times today, and I'm in the middle of what looks like a typhoon coming through. It will be sunny in 10 minutes. Sunny in 10 minutes.
Yeah, I can't say the same. In New York, it's a pretty nice day. It's a bit warm. It's the summer, but it's okay. I won't complain.
Thank you for being inside for this. I appreciate
it. Very good. Well, I guess let's just jump into things here. Give us a bit of a background on yourself and kind of what you're doing today and kind of the backstory of how you got there, and then we'll open things up a bit more.
Got it. Okay, that's a big question. I'll just go then. You stop me when you've had enough. So my name is Brittain, and I've been in innovation for the last 30 years. My journey from being a sort of academic engineer, mechanical engineer, to becoming an industrial designer, and that the timings of that were sort of in the 90s when we were all concerned about making technology accessible. So this is at the same time that climate innovators were talking about wind turbines, and this was a period of engineers finding engineering solutions, and my role as designer was to try and make that stuff safe and attractive and put features that people would understand it. I think the kind of later innovation journey started to become very centered around customer service, and I found myself working more in projects where we were really solely focused on customer adoption, getting people to do things. Why won't people adopt this new technology? How do we make, and things like apps arrived so that we could address them directly. We could help people navigate choices. We could make it very easy for them to do things that were otherwise very complicated. So there's a lot of education in the designer's job, a lot of need to make sure people understood the trade-offs and the decisions they were making. And I know that in the climate space that started, at that point in my career, I wasn't specifically working in climate, but I was finding myself surrounded by designers who were tackling the tasks of making people aware of the energy they were consuming, and the kind of apps and storytelling to make people take control of their own consumption. And I think more recently, my innovation experience has been in the area of data and sensors, where we started to see the new opportunity, the primary opportunities in digital, which aren't just about the internet and selling things and educating, but to really get unique data sets. And that has really uncovered for me my current phase of work, which is in trying to find ways of reducing impact. And over this conversation, I'll explain more about how we're doing it. But so I think I've really understood that that some of the things that I was hoping to do back in the 80s and 90s, like to get people to adopt solar systems or heat pumps, because this stuff's been around a long time, has now been around people feeling enabled to do so. that we now have the data. I know where I am. I know what power is on what sun is hitting my roof, as I have already expressed today. Not a great deal. There's quite a lot of wind. Maybe I can do something with that I can put in my particular address, and I can join something, and I can participate. That I've got customer service models around me and apps that will give me the behaviors of where I could do it and how I could adopt it and what I can do. So I'm now starting to see that the last 30 years hasn't been wasted. It joins up. It joins up now that the Innovators Toolkit says, I think we've got the big tools to move the needle when it comes to real climate change and us taking action. That we've got the education tools, and that we've got the sensors and the data to deal with quite specific problems, or to help people find their unique thing that they can do. So that would be a kind of holistic view of somebody who's had this much experience trying to make change happen. And where am I today? Well, I've also been learning how to, what's the best way to run a business in the middle of this space, because being an innovator is hard. It can be a lonely place for a lot of people listening to this podcast.
Hey there. Quick break to remind any founders or VCs listening, if you are looking for deal flow, seeking to raise funding, looking for partners to help service your needs, or perhaps you're looking for corporate investment partners, feel free to reach out to us through our Slack channel, which can be found in the description. Because we meet a lot of people in this space, we set aside time each week to make introductions to the various people that we encounter. This is something we do free of charge in order to help these incredible companies solving climate change to scale. Looking forward to hearing from you in the Slack channel.
Or it can be a frustrating place, because there are 1,000 ideas that never happen for the one that does. So I, put a lot of that experience together and looked around for people like me who had a lot to bring, but were looking for what could we do today. 7 years ago, I started a business in the UK with two co-founders, called the Insurtech Gateway. I'll spell it for you later. But the Insurtech Gateway is an incubator for tech and climate founders, to help mitigate risk, to mitigate the risks that stop a lot of the new technologies being adopted by customers, adopted by lenders and banks, so that we could really start to make some progress in achieving our impact goals, whether you're in all aspects of the climate space. We've been, during that 7 years, we've launched 30 companies. We've got live pilots in 97 countries, many in the US, covering things from flood to typhoons to electric battery supply chains, through to cows getting overheated in the Indian farms, all where founders have come to mitigate risk, and we've helped them. And at the tail end of our business is a network of insurers and VCs who help those businesses scale, including our own fund.
I just want to make sure I kind of try to understand this and repackage it back to you so I've got this correctly. So broadly speaking, a lot of the issue for adoption of new technology in a lot of cases is trust, right? And I think I was going to make a comment earlier, but I wanted to let you finish, was I come from a place, I think I talked about this when we had our intro call before, but I come from a place in the country, in the US, where people don't really, they're exactly the people you talk about, right? They're like, EVs, they're crap. They're like, I can't get far with them. And a lot of times there's all these ideas of what things are and what they aren't. And it's usually just a misunderstanding. It's a lack of understanding what they really are. I always use my parents as an example of somebody who they drive usually about 50 miles, about a round trip of 100 miles, usually, give or take, many times a week, right? And they pay for gas because of that, right? When they could just have an electric vehicle, right? And I try to, talk to my dad about these things and explain, hey, you say that this is just bad because you're kind of like anti the left ideas or whatever, right, around climate, but this is practical for you, right? This makes more sense, right? And so anyways, that's interesting perspective, but essentially to try to repackage what you guys are doing is finding the risks, finding the barriers to entry for people with various things, right? Specifically climate is one of them, but other things, and finding ways to incubate businesses that are getting rid of that business, essentially. Is that correct?
That's right. It's entirely right. And one of the outcomes of that. So yes, so thank you. You framed it really nicely. And so I think there is a point where, so effectively you have a series of products that come out of the end of this. And they're quite typically things like SaaS tools, or there might be more behavioral change apps. And in many cases, they need to be regulated or work with regulated customers. So that's the hard bit. It's the hard bit to understand when you're on the outside. So that if people can do the things that you just said, that they can mitigate and they can work out where risk is, and they've got some data sets that make you go, they recognize there's a risk problem, and they've probably got some data or a way of reducing the risk, then it's likely within an environment like ours that they could design a product that would either be a direct mitigation tool, a SaaS or an education play, or it could be bundled as a really low-cost insurance product.
Hey there. Are you building a climate tech business and looking for very specialized talent? Consider reaching out to our sponsors, NextWave Partners. NextWave are experts in talent acquisition, recruitment, and retention across the climate tech, renewables, and ESG spaces globally. So if your team is growing or you're looking to make a career change yourself, feel free to reach out to NextWave at next-wavepartners.com or reach out to one of their consultants directly via their LinkedIn page. Yeah.
So a low-cost insurance product. So you're gone.
Yeah, there's one thing I just want to get for people. I think this is a very smart person's kind of problem. I struggle with this sometimes to understand this, but could you talk a little bit about maybe how, like in very, very simple terms, by the way, because if I can't understand it, I don't know, maybe most people won't understand it, is how do insurance companies work, right? They decide to take on risk because they understand the problem probably well. They know, hey, from our actuaries, we understand that this is actually what we're going to have the risk, and here's how much we have to have insured, et cetera. How can you do that for these new problems, things like climate risk, right? How are you able to find that information that insurance companies don't already have? Is it because they're in a different industry? They're mostly basing their information off of legacy data rather than forecasting. Like, can you help us understand how it, broadly speaking, works to decide, okay, here is a risk, and we know more than the average person on how it's going to work or how to mitigate it, so we can take on that risk and insure it, for example. Does this question make sense?
Totally. No, I totally get it. I think the easiest way to explain it to you is that the insurance, what the insurance industry does, what's an insurance business's job, versus what's this new opportunity now that we're all super digital and technical. Because I think and in that is really a story about agility and pace and the stuff we're finding, that by saying the insurance industry, already we're talking about a machine level, a factory. And factories don't tend to pick up new niches and new things quickly. Factories do what factories do best, make a few things global. So an insurance factory will offer you your home policies and your car policies and all the things that we've used to for generations. And inside that is the bit that, the how does insurance work question, is that let's take a regular car. You've got a car and you've got car insurance. I'll make something super easy for everybody to understand. Insurance works by getting a lot of you onto one pool of capital. So we'll find 1 million people like you, Silas, and we'll put you all into one pool with a likelihood that maybe only 5 of you, or let's say 500 of you, will have a claim in the next year. So it's a quantity. It works at it's a power law to make insurance work. But the rules of insurance, how do you win if you're an insurer? The quantitative side of insurance is by picking slightly better drivers than everybody else, by pricing those drivers slightly better than everybody else. That's what the factory does. And a lot of setting conditions for drivers a little smarter than everybody else. So it's in the percentage points, the basis points that industry works, because it's massive, a $2 trillion industry, that its intelligence at the insurance level is at that end. So it's saying, Silas, in this country, we're a lot more, in my state, it's a lot more compressed. So we have lots of questions like, is your car parked on the road? Have you got an alarm? Have you got a street lamp over your car? And if so, the risk pricing radically changes. And you have to shop around to find someone that's willing to let you have car insurance. And the prices are just up and down, because their business is to play around with the small things there, because they know that their survival is based on having only 500 people out of that 1 million and not having suddenly half of them claim, because that's what the business. So they mitigate by asking lots of questions that make it hard for people like you and I to get all the options in front of us. If we were 18, we wouldn't get protection for most people. If we're 85, we wouldn't get protection for most people. If we drive a 10-litre truck with a rocket on the back, we won't get protection. All the things we'd love to do and love to be, we can't do very easily. So the insurance market has worked by sort of sniffing out good risk. And they have got 50 years of historical evidence that tells them they're exactly right and they should tweak that and tweak this. So those are the rules. You've got a factory approach and you've got a couple of things that they slide around, but generally they're doing very similar things and just trying to get a tiny thing around each other. And when things go wrong, they just put the prices up. Unilaterally, they put the price up. Mm-hmm. They don't have to compete. They just say, we're all going to agree that we're going to set the prices high. So it's always wins when the market gets tricky. So from that basic skeleton, I hope I've given you enough.
Yeah, that's good. I'd like to then, so with that as a baseline, kind of let's project forward into what you guys are doing with newer risks or unfamiliar risks to these factory approaches. How are you looking at it? Because I think I have an idea of where you're going to go, but I want to just kind of go from here forward.
Well, good. I'm sure you could finish the sentence, but I'm building definitely on so there's a mitigation piece, which is like all the things we could use to design out risk. And these are obviously, I'm now looking at more niche problems, like why are people not adopting solar panels? That could be one we could look at. Or it could be why are people not adopting carbon credits? Or electric vehicles and their batteries? What's the risk going on in batteries? And we could get underneath that. From a big, historical data set that we'd have to work on, we haven't got 60 years of data on some of these. In fact, some of these batteries have only been invented today. So that requires, instead of historical modeling as a kind of core, the actuary that you mentioned earlier, the prime scientist in the middle is the actuary, and we all, sits in the throne at the middle of an insurance company. In an Insurtech, you've got predictive models, you've got rapid analytics of what's happening today. It's got to be dynamic because today we know more than we knew yesterday, and so culturally it's quite different. And when the two come together, the best we can do is to say, look, and we're sorry we can't give you 20 years or 10 years, but we can give you. We've got 3 years coming together quite nicely so far. And this is looking quite good in the small sample. So you guys can relax a bit that we're not about to take on a ridiculous risk.
Hey there. Are you building a climate tech business and looking for very specialized talent? Consider reaching out to our sponsors, NextWave Partners. NextWave are experts in talent acquisition, recruitment, and retention across the climate tech, renewables, and ESG spaces globally. So if your team is growing or you're looking to make a career change yourself, feel free to reach out to NextWave at next-wavepartners.com or reach out to one of their consultants directly via their LinkedIn page. So when it comes to, looking at the mitigation items, right, you talk about in the case of the insurance factories, right, we'll just call them that, they are looking at just choosing the right risk, right? So I want to understand when you guys talk about incubating these businesses, I'm assuming it has to do more with maybe more mechanical things or actual solutions to these problems. So can we talk about some of the way you do that, right? Are you looking for a technology that can mitigate the actual risk, or is it behavioral? How does that work? Like, how do you determine what companies to incubate and to work on?
This is a thesis which is evolving around brilliant founders. So I'll give you a couple of flavors of things that are coming through, which I hope, and I'll try to make them more transferable so that your listeners may connect with some of the problems they're solving. I'll give you some examples from the portfolio because I think that might be the best way to share with you how some of these ideas are coming through, and they might be transferable for your listeners. One of the businesses we're currently working with is called Ibiza. And Ibiza have just launched a product who are protecting the dairy farmers in India from extreme heat, from excessive heat. So we have a situation where you have a fragmented smallhold farmer So there are 1 million farmers, all looking after between 3 and 50 cows, or 3 and 100 cows as a group. It gets to 45 degrees and the milk gets spoiled. This doesn't sound like, I thought this sounded like a novel problem when it was first explained to me, that that an entire livelihood, an entire community whose livelihood is based on the milk from cows, from the sacred cow. They're not eating the cow, they're using them for milk. And that the amount of milk wasted in one day in India was the same amount of milk that we consume in a whole year in the United Kingdom. And I was like, oh, I see this little niche that I realized was, so what are we talking about in terms of impact? It's like, well, if they can't get they don't have any savings, and this is a hand-to-mouth culture in terms of, income and local communities, and it's completely, focused in certain rural communities. If this goes on for a month, this is almost becomes a migration problem, because this is the sole income. And I think, okay, this is enormous. And so we have a business called Ibisa who worked out how to distribute efficiently to those farmers. They found people along the intermediary. So they said to us, we think there's a product, we think the risk is rare enough, that this extreme heat, that we can do a number of things. We can say, look, we will give you an insurance product if it goes over 40 degrees. And we're going to give you a lot of guidance to do what you can do between 37 and 40 degrees, because that's manageable. You can manage that. You and the people around you, the NGOs around you, and the things happening, the shelters that we could build, the understanding of when to put the cows out and where to find shadow when we can find it, that we can manage the herd more efficiently, and that we've got and then we found an insurer who will sit behind that and say that in the event that it does go to this, we will deploy capital via the various channels that will give money at the point of need to get these farmers out of trouble, that will effectively pay for that community to survive. And they're not insuring the cow. So there's a whole bunch of hacks in here. So the insurer understands how to insure the cow, like to insure the underwrite. Mixing the word underwrite and insure there. How to insure the cow like it's used to insuring the car.
Mm-hmm.
In this case, it's ensuring the yield. It's a totally intangible thing. Like, how do we know what amount of milk's come out of this cow? Like, I'm in Chicago, or I'm in Bangalore, and I'm insuring a cow in deepest India. How do I know what the yield is? I can count cows. Can I? Maybe I can't even count cows. We had to create. You've got to think of a way in which you can count the make the milk yield an asset, and then find a group of insurers on the other side who would be willing to back the extreme event, and then start thinking about using the ecosystem, the community in the middle, to manage and mitigate the risk. So that business, which is called Ibisa, which has got 6 people working for it, is currently protecting 250,000 smallhold farmers. And those farmers, this is just step one. And we've invested in them. We've helped them build out that model. We've given them all the support in terms of meeting insurers, and frankly, just told them to carry on most of the time, to say you're on the right track, keep going, because they're really smart. And they needed people to say, you're in the right place, keep going. They've had grants and sponsorship from the European Space Agency, from various impact funds that have wanted to see them, prove this model out. And we're so excited about the big number. 250,000 smallhold farmers could become 1,000 times that scale with a model like this. So we've got a scalable model here. So, when we stand back from that and you say, well, is that, so where's the insurance? I thought we were going to help these farmers with insuring their tractors, because we really want to help smallhold farmers. It's like, yeah, we're gonna stop migration. Like, these guys are gonna, we're gonna really nip this in the bud where it's important. And this time next year, they'll be asking to get a loan from the local bank because they're more stable, and they'll go, maybe I'm going to get that solar paneled irrigation system, and maybe I'm going to earn my, now that the shock is being taken out of my system, now I'm in a place to actually do something.
Yeah, you'll have I think this is something, I forget where I've heard this, but it's the mentality can change, right? When you're not going from when you can get out of survival mode, essentially, you can then
Yeah.
go to investing mode, right, into the future, and finding other ways to improve their livelihood and also their operation as well, right? And that's kind of where the magic starts to happen, right?
Yes, exactly. And I'm very conscious in the world of climate and climate innovation that when they say I'm going to save 1 million farmers, it just sounds like yippee-yi-yay. It just sounds incredible. And I have to remember that I'm just we're the boring guys just trying to get the first base. We're just trying to get the first base, which is achievable, and it requires some really good smarts brought from a few industries, and just say, look, this is, we want to do that too. But I think we've just found a way to make some quick progress, to deploy investment in a way that's going to, get people on the first rung. And that, now we're getting here. Let's start bringing some lending investors into that program. The next phase for them is to say, right, now we're here. Let's do some more. Let's get some more impact, investment in alongside this first step.
Mm-hmm.
Let's bring some lending investors in. Why? Because now we can start to really build this community.
Mm-hmm.
So I recognize we're at the bottom rung of the ladder of some big programmatic change.
Mm-hmm. One thing I'm curious about is how do you determine which problems to solve, or how do you identify which problems to solve? Because there's probably a lot of, I'm assuming in the world of data now, there's a lot of things that aren't being tracked, or there's data that's being wasted. But how do you actually go and decide, okay, of all the problems that we are aware of, at least, here's the ones we want to work on finding a solution for? Or perhaps even further than that, thinking, how do we identify the problems that we're not even aware of yet? Like, can you walk us through a little bit of that? I'm always curious for people to have an understanding of how to identify an area to work on, because there's only so much time in a day. You talked about there being 1,000 ideas for every idea that's actually pursued, and I'm assuming there's a trade-off here in time. So can you talk about that?
It's an excellent question, and it's one of my. I didn't prime this, but thank you for asking it, Silas. You're on the money with that question, because I think so much of this discussion is a strategic one of what's the most important thing to do. And I spent a lot of my time pretending to be a strategist. And I think that the one lesson I've learned is that you just need the approach I've learned. I can't preach wisdom at everybody. The approach that I've settled on is one where somebody arrives in your life and they've identified a problem to be solved, that they have got a simple first step as how to solve it. And from that point on, you just got to let them have their showcase and show that they're right. Because there's plenty of people out there with bigger strategies and things to solve that we just need to connect with. So I let other people have that big strategic conversation, if I'm honest with you, Silas. I think if I can look back on our work over the last 6 years and work I've done previously, and say that I think I'm feeling a lot more confident of the role of startup founders to solve some of those big strategic problems. So maybe a question I would pose back is, amongst the big strategic questions, which ones could startups solve? Because I think some of them could be solved by government, some of them can be solved by big corporations, and some of them could be solved by two brothers and a mate, and a bit of time to work it out. And I think the ones that require, this where small groups can solve stuff, if I'm not going too far off beat with your question, are ones where there is a clear new value exchange, to have productized a very difficult problem.
Mm-hmm.
I've only given you one example of a dozen I could have used, but they successfully productized an enormous problem, which is smallhold farmers are in a lot of trouble, and they're incredibly vulnerable to heat risk and all sorts of other risks as well,
Mm-hmm.
and drought and hailstones. But they successfully productized something so that large-scale strategic thinkers could say, it's in my strategy to keep the smallhold farmer protected. Why? Because they're part of my food supply chain. I must protect my food supply chain. And I say, Well, I've got a couple of startup founders who have developed new products that I think could be scaled in your organization to solve your food supply chain issue.
Mm-hmm.
So I try to meet that big strategic conversation in the middle. And I'm here, but basically in this podcast to try and meet people who could help me put those two marketplaces together in a marketplace.
Yeah, I think there's a couple of things you touched on, and one comment I want to make too, which is I think a lot of people tend to just see insurance as like, oh man, it's evil, it's causing all these problems because in the end, the insurance company always wins. But I want to go back to the example you talked about of if these farmers can, with a very small premium, de-risk what could be a massive cost to them, it can afford them the opportunity to go from survival mode to investing mode, right? I think that that's something that people need to really be aware of. Yes, perhaps there are examples where insurance isn't necessary and you can just kind of self-insure by investing that same amount of money into a mitigation strategy. But in a circumstance like this, I think it's important to point that out. The second thing I wanted to kind of double back on what you mentioned, which is the point around a simple first step to solve a problem, right? I think this is extremely important. It's really hard in the hardware space. In software, it's maybe easier to build an MVP and identify if people are interested in something. But with hardware, it's obviously important to find a simple way to begin, right? And I think that this is interesting. So I guess what I want to understand is, if we look at this as instead of really an insurance company, but so much of a rather an incubator, what does the process look like for founders, and how do you, I guess, how do you go about attracting these? Are these usually businesses that are already running or have something going on? Is it an idea that you just kind of try to interview a lot of people and say, hey, what's your idea for solving some problem? And then you identify, okay, this, from our group of people looking at this, we think that this can be commercialized in a short period of time and can actually make an effect. What does that process look like? I want to understand from the entire kind of beginning to end of finding these people and then bringing them through the process. What does that entail?
But you like your big open questions, don't you? By the way, can we put a pin in the hardware point? Because I really would like to share a hardware example with you too.
Yeah, certainly.
The So how do we find founders? I mean, it's quite challenging. And it's challenging for all of us to find good founders in this, in the early stages. But I think I'm 6 years with the Gateway, the Insurtech Gateway. And when we started it, Rob, Richard, myself, we thought we had to make a big noise. So I think we promoted ourselves within as a platform, and we made it pretty clear that we were the only place you could really start in an industry that wasn't innovating. So we started. So our first outreach marketing was actually to build a platform that was just the ultimate toolkit for anybody trying to play in the risk space. So we spent our first year not waving our checkbook, but we spent the first year getting authorized and regulated ourselves. And this was a question I know you asked me last week about how does this brokerage thing play in? So the UK authorization, insurance authorizations are given by FCA, the Financial Conduct Authority. And we had 6 years ago the first authorizations of our own, which effectively means if you had an interest, if you're a tech founder or a climate founder or a combination of the two, and you had an idea like some that we've discussed already, that we had the wherewithal within one group of people to authorize you so you could go into market and test it, and we'd give you some small capital just to try it. And we had some insurers around us who would give you some capacity, some risk money if required, to try an idea out. Let's go and insure 50 smallhold farmers because it sounds like this could really change their lives. Let's try it and see if it works. And the three of us could do that without having to go and ask anybody, which in a sector like insurance was just a game changer. Because that is 2 years of conversations of I've not seen enough data. You can imagine all the earlier part of our conversation. Where's your historic data? Show me this. Show me this. Show me the cow data. Show me the milk data. Show me the. We just know on the ground that it works like this. And I've been, I'm an NGO person. I've been helping dairy farmers for years, and this is their problem. Can't we just try it? We were the group that could say yes. So I think partly was that people who were trying to do this immediately saw that we'd created the gateway, hence the name Gateway. This was a gateway for innovators to finally get into a regulated market and to get access to enormous resources like insurance capacity and insurance investment and impact investment, frankly. So I think that was the first step we did. And we made a lot of noises in non-insurance places like TechCrunch and the early, I mean, we didn't really know where the innovators hung out at the time. We just had to keep saying we're here and to see if people would refer us. So that was, 2006, 7, late 16, early 17. So we, you can imagine that it was a bit of a lonely year as we were trying to be the coolest guys in insurance. But and I was never in insurance, so I couldn't even answer the difficult questions. But then they started to come, and they started to come from the places on the periphery. So they came from risk modeling. So the next people that came in were like, I've got a new flood risk model, and I've got a hardware problem, which I want to come back to, a hardware solution to a risk problem. Can you help me get this launched? And that started to show that we were starting to define the boundaries of what we can do. And with that came more risk modeling innovators and more IoT and sensor-based innovators started to come because one just saw the other. So all we have done since we started was one, create the platform to launch, and then two, just select a small number of innovators and just make sure their things work. 5 a year since we started, which is why we've only got 30 stories, and 22 of them are still thriving because we've just stuck on quality, and that has given us a kind of network effect of founders. So I find that one of that founder I just mentioned to you with the Miria, with the Kita, with the Ibiza project and the cows, has just been shortlisted for the MIT Solve Prize. And as a result of that, I'm getting inbound from participants in the MIT Solve program. Equally, the business I want to talk to you about, the flood program, got involved in FEMA and the flood relief in the US. And we start to get inbound around hurricanes and earthquakes and other aspects of risk. So it's been a slow burn, which is nobody likes to hear the word burn in insurance. It sounds too risky. But it's been an organic growth journey of us just demonstrating by example of some of the things that really work when you put the passion of impact founders and particularly climate founders with the kind of mechanics of risk and the engineering of risk, with the kind of big industry of insurance and the venture capital that sits around it.
Yeah, I think it's difficult. Some of these things, it's very hard for founders to understand sometimes the time, and then there's sometimes catalytic moments in the growth of your business. And I think it's very, very easy to have I don't know the specific word for it. When people look back on history and they're like, oh, this is exactly how it played out, right? It was this clear, it was this and that, but it's not clear, right? In the time that you're doing it, you're oftentimes wondering, what is going on? Am I doing the right thing? Am I even doing the right thing personally, right? And then there's times where catalytic moments happen and things can really take off, and it looks like an overnight success, right? But it's definitely not.
Well, there's 10 years of sweat behind every success.
Exactly.
And sadly, it means I've got another 3 years to go till I get mine. Between
exactly. Yeah. And something you also mentioned very early on in the conversation, I just wanted to re-highlight, which I think, maybe you want to comment on, but I just want to point out is that you had noted that it seems like now everything is coming together, right? In your career, and understanding that, oh, these things I did before, they didn't necessarily seem relevant to climate or whatnot, but that design experience, now it all comes together, right? And I think that there's just maybe a point for founders to consider a little bit more on the personal side of, as you're building your companies, is just trust the process, right? There's going to be a lot of things that suddenly come together, and you maybe feel like, man, this is my purpose. Maybe your purpose was something different 5 years ago, but you now realize that some of the kind of precursors to what you're doing now really will kick into gear. I think people need to just trust the process a little bit more. It's hard to do, but I just wanted to highlight that.
I appreciate it. I think it's funny. There's a word while I was thinking how to explain it to you, there's one word that was just resonated through all of it, which is just adoption. And it's just recognizing that so much of the things we're trying to solve are actually just barriers to adoption.
Mm-hmm.
The engineering and the chemistry and the science has been there for a long time. We've just got to get more people to do it.
Yeah, absolutely. I think that's the biggest issue with a lot of these climate technologies is that people just are not familiar or they don't know, there's too many barriers for them. I think there's been a lot of examples of people on the financing side being able to just remove the barrier to installing new technology, right? Which is the financing side. I think the solar industry is very, very well sorted in that space now for residential solar. You don't usually now have to pay any capex up front. You just pay your electricity bill, and over time you'll pay for your solar panels, or rather they'll pay for themselves. Um, I think there's a lot of those things. So I'm very keen on this. You had a point you wanted to bring up about hardware, but let's talk about that.
I think there's something also that's happened in the middle here, which is things like subscriptions. So what used to look like $10,000 for solar panels is now some price per month, and that is shifting. That's very clever financing engineering behind the scenes, because it's still a $10,000 solar capturing system or conversion system, whatever. But we've just found a way to amortize this over time and to make it more palatable and easily to adopt by the customer. But that also means that somebody else is taking the risk. And in that is a risk mitigation story all over it. The relationship between, the person who owns that solar panel that's on your neighbor's roof that's only paying $100 a month for it, because they don't own it. They've only paid $200 so far. It's still a $10,000 unit. It belongs to some loan house somewhere that's being managed by some kind of operator who is desperately trying to work out how to make this thing work, and hopes that you don't default on your payments, a risk problem, that the equipment doesn't go wrong, a warranty and risk problem, and that the cost of capital will stay sensible, some kind of deep risk transfer problem in the financing space as well. So there is like places all the way along that chain to make a subscription model work. So I find myself talking to founders trying to, if you start back at the customer, why is everybody doing it? Well, I just paid $100 a month now. Like, that wasn't here 20 years ago. So I think there's something in that combination that that I'm definitely going off on one. But anyway, I should come back to your hardware question. But I think that is probably a central theme for a lot of your other conversations outside of me, which is we've got to make financing easier. We've got to access lending easier. We've got to do all these things. And I just wanted to show you where the little thin layer of risk transfer and insurance is it's everywhere. And that same guy that wants to give you the $100 a month solar panel also wants to come and check your house that you don't have, Wizard of Oz north wind coming through, because it's his risk, because he owns the flipping solar panels.
Yeah.
So he needs to know that he's not putting it in a place he's going to lose it, because it's his problem and not the customer's right now. Anyway, I'm coming back a step, but there we go. Insurance is pervasive, and mitigating behavior is pervasive. So I'll pause, because what I wanted to do was tell you a hardware story, because I love hardware. I'm a former mechanical engineer. Of course, I'm going to move chairs out the way for somebody that comes in the door with a great sensor or a great IoT device. I can't help myself. But I wish a few more of them would come. But so a group called FloodFlash, we met them really back at the beginning, 2017. And FloodFlash are a number of new terms that you reminded me to make this very Fisher Price, if you use that expression in America, but to make the language simple. But they are a sensor that measures when an extreme flood happens. So I don't know what it looks like outside your window, Silas, but if you were a small business like a print shop or something, and you had a river run through it or runs by it, sounds quite romantic now as a scene. But every so often that thing raises 2 meters and just takes every tree and every 70 years. There's a line on the wall of the local church and said, this happened in 1906 and 1946 and 1985, and we were all terrified it's going to happen this year or next year, because that's all we hear about. So in that space is a natural place to put a device, because Back to the insurance factory. The insurance factory is terrified of flood risk because what could it do? I mean, what could it do if the 2 meters of water runs through a city? I mean, that's billions and billions and, 30, 40, 100 billion of loss going through a city. But what they can do, and the natural thing is to reject it. Say, look, we just can't possibly do this. We can't possibly cover this town, this state, these people for flood because there's not enough money in the world. So we're going to have to work this through together. So what FloodFlash did and have done is they worked out a mixture of behavior and IoT and insurance. So the sensor is a moisture, let's say it's a trigger sensor that knows when that water rises. The FloodFlash product is in 3 pieces. There's a kind of a mitigation story, a sensor story, and then an insurance story. And I'm going to walk through those 3 bits for you. So the sensor basically is a trigger for when it gets wet. It says, if I'm going to put it on the wall of this print shop next to a river, and if it gets wet at 50 centimeters, I will pay you $200,000 instantly. And guess what? That is the exclusion from your flood insurance policy. That flood insurance policy says, we're going to insure you up to whatever, 1 meter, 50 centimeters, because anything under that is just too risky for us. Because we know that there are so many floods in this area, and historically, if this happens, we're wiped out. We can't afford to do it. The house loses. So in the middle, you've got this device. Now think about the behavioral conversation that happens here. So if you're now the customer, you run the print shop, you look at this sensor and say, right, well, can I have it to go all the way up to 2 meters? Because in 1936, it was a 2-meter flood. And you say, well, yeah, we could give you a price for this. So we're actually, do you know what? I'm actually concerned about the flood that happens every 3 weeks, which is about 10 centimeters off the ground. You say, so you've got a flood that happens every 3 weeks and it's 10 centimeters, and you want me to protect you that. So you're going to pay me, and every month I'm going to pay you back money because you've got a flood every 2 weeks. So you can see the absurdity of the conversation, why the insurers moved away from the risk in the first place, because people haven't taken it seriously. So the conversation around the sensor is actually, look, here's a good place to put this. Let's make it 50 centimeters. Okay, take everything that's valuable and put it higher than 50 centimeters. Because you know and I know that that's most likely to get flooded. So don't blame me and the insurer for saying I can't do it. Move it. Like lift your print machine. Or I mean, I used a big example. But this is often like, electrical software, IT systems. Lift it so that someone walks around the place and says, look, I know that if a flood comes, I just unplug the thing and we go off for 6 hours or 2 days. And then when the flood's gone, I plug it back in again and we're up and running. And they go, well, what's the cost of that? Well, I'm probably going to lose 3 days of business. So probably $100,000. Okay, so why don't we protect you for $100,000 if it goes over 50 centimeters and you move everything? Bang, insured. Now, so that's a complex conversation about the owner of the risk, the print shop, not just trying to dump it on the, and that example, the reason I went through those 3 steps in such an annoying Fisher-Price primary school teacher way is because that's totally transferable to so many other things we're looking at. Why aren't we going to invest in that offshore wind farm project, $300 million? Well, what about the tidal waves? What about that? Well, let's go and have a look at that piece of land that you're going to put it in, and let's work out what we can do about positioning this in the right place. Why don't we put it there instead, where there's less likelihood of a tidal wave, an offshore side current, a slip under the water, a gust? It's the same conversation in mitigation. And then we put the mast in, the solar farm in, and then we see over time that we've got far less risk and we've mitigated it. Mm-hmm. Conversation about how I design where I'm placing my assets that we start to make happen when we start to uniquely address things with sensors, with targeted information and IoT devices.
Yeah, I think it's just super interesting. It's hard. This is sometimes a difficult topic for me to figure out how to find value in the conversation. But I think just broadly speaking, we have there's a lot of people who talk about adaptation versus mitigation in the climate tech space, and I think that there is, despite we don't like to talk about it this way, but there is a lot of adaptation that has to happen, right? And people realizing the reality of negative situations of climate change happening and causing problems, and just figuring out ways to avoid it, right? I think it was, I grew up in a place where there's never hurricanes. I grew up in Wisconsin. The only thing we have is extremely cold weather, which we got used to, and occasionally, very very occasionally, we would have tornadoes, right? That's about it. And I always remember hearing every single year, twice a year at least, there'd be some kind of massive like destruction of property in Florida or something, or down in the south where the hurricanes come. And I always ask myself, why would anybody live in Florida? Like, I just do not understand why. Please just leave. I ended up the joke's on me. I ended up living in Florida for 2 months, but um, I just never understood why people didn't change, right? Like, why wouldn't they leave and just get rid of the problem? But I think it was around that time, at some point when I was younger, I remember hearing about a company who was making the properties very, it cost a little bit, but they were building properties that were very um, protected from these damages, right? They could handle high winds, they could handle flooding, things like that. And I just think it's important for us to remember that, yes, life is going to have to change in a lot of ways. And we have to just find out maybe if you want to be proactive and avoid the costs, look around you, look around at the problems other people have faced in the past 50 years, and imagine some of those like crazy events that have happened. They're going to happen more frequently. So find out what were the actual damages, like you mentioned here, and find ways to avoid that or to prevent it. Because as I think the saying goes, an ounce of prevention is worth a pound of cure or something like that. I don't know the exact words, but something of that nature.
I feel like my grandmother would know the answer to that question, to that statement.
Yeah, maybe it's an ounce of sweat is worth a gallon of blood or something. Like that's
Well,
a war term, but
consider
anyways, the point being, we have to be aware of these things, and I think it's really interesting. My question is always though, how do you find those issues? Because usually people aren't going to think about these things until it's too late. That's why a lot of people, especially in some countries like in the US, I think is an example. A lot of people until recently have not really believed that climate change was too much of an issue because, like where I grew up, we just thought it was bad weather, right? It was tornadoes occasionally and absolutely, freezing cold weather every year, and it's very sporadic. But now we're seeing constantly floods, fires, extreme weather conditions that are super out of the ordinary. And now people are realizing it. But how can people realize it beforehand and fix it beforehand? Do you guys have any things that you're doing to try to help consumers identify these issues ahead of time and get ahead of the curve?
Well, I mean, the FloodFlash example I gave you, I think, is a very good example of this, and it's a space called parametrics, which is this where you have a trigger and people realize that they can do something to affect the trigger. So I think if your audience wanted to read more about this space and understand how it might apply to them, I think you can find a parametric insurance. I mean, there's two parts to your question. Where can we find all these founders? And are there any examples in the portfolio? I've got 3 or 4 examples of parametric solutions that we've been trying to support. But I think if your listeners are trying to find something that they can do themselves, put into Google any kind of major risk and the word parametric, earthquake parametric, typhoon parametric. And in that, you'll find teams of scientists, insurance companies, behavioral scientists trying to find ways of helping customers who have been rejected for some kind of risk group. I mean, generally, this comes from people who've been rejected. Where you live's too dangerous. What you do is too dangerous. And that they have found mechanisms like this so that they can then find an affordable way of being covered.
Mm-hmm. Okay, interesting.
You mentioned something. You triggered something in my head earlier because I'm conscious that I've given you a lot of examples in the adaptation space, and that there's a if we could discuss maybe more mitigation ideas, it might be something we can apply more to the clean tech space. This might be interesting for you. I'll give it a go anyway.
Certainly.
There's an example of we have a business that we've been supporting only 9 months now called Chai Predict. Chai like the tea, CHAI. And I'm fascinating them because they're a group of commodity traders, energy, metals, and they understand that they have been supporting the big banks and the big investors and lenders around commodity trading and predicting the various prices of emerging products too. So today they're helping small businesses. The reason they're in our portfolio is that they saw an opportunity to effectively design out inflation, to see if we could take out the shock and volatility of prices of critical materials for builders, energy provision, and how does a CFO in a business plan for this when this thing is fluctuating and the news and the markets are just in a dizzy spin. We're not entirely sure what we should do. Should I buy all my energy now? Should I wait till later? Should I buy my materials and store it? And that uncertainty is causing huge problems for business, certainly in the UK. And we're hearing about this as a worldwide problem. So the kind of inflationary protection. And at the heart of that is, price smoothing. The role of insurance is to smooth out prices, which is to effectively to ensure the worst price against the best price. So the reason I mention this is because aspects like solar energy are continually are being given, all the renewable energy space have got two challenges. One is the seasonality or the weather dependency of these energy sources means that volatility of supply is the only thing you hear. When you say, why aren't you transitioning from oil and nuclear to renewables? Well, if only we could trust the regular supply of it. And then the answer comes, well, it's a storage problem, isn't it? It's a storage around, if we could just store it and we could have capacity, then we could have all this energy and it would be a storage reservoir to the sky of the energy. And it would be all these, lithium metals and, whatever it's going to be. And then we've got the solution. It's, then we can use all these renewables. But the same conversation continually comes back to we're trying to reduce the volatility of the supply to match the demand. And insurance plays a role as a buffer. So I've seen that Chai Predict solution, that of course this is going to be the kind of mechanism that's going to smooth out the volatility of solar off-grid energy creation and storage. Of course, it's going to be the mechanism that's going to be applied and is being applied to carbon development projects, where the outcome of but when will the carbon storage be online again? And will it fully retire at the end of its? Hang on, is that it's just full of risks. That means that the pricing of these new, I'm jumping around too many examples, but you see the fundamental at play here is that we don't trust the supply of renewable, don't trust the supply of new carbon development. It's unproven, it's volatile, it's not quite there yet. It's not quite there yet. It's either not quite there yet or it's inconsistent in its supply. So we need two different types of mechanism. We need a short-term buffer, overnight energy versus, which we can do mechanically, but we can also do with financial instruments. We need a long-term buffer that says this renewable will come online by 2040. And I need you to commit to it. I need you to commit your funding. I need you to commit I need you to underwrite this. I need you to commit your industrial transition plan to this. But it might not be there yet. We're all hung up in this. It might not be there yet. Therefore, we can't massively commit. So we're all looking for the, so I'm on this podcast because I'm trying to give enough examples to say, if you're a risk modeler, a commodity modeler, if you're, you realize that what you could do is be designing out volatility, not just in today's markets, but in the emerging markets. You could be designing out the volatility of night and day of energy. And of course, and the volatility of batteries and the elasticity of batteries is all risk.
Mm-hmm. Yeah, no, that makes a lot of sense. I think there's a couple I want to get towards the closing here, and there's something I want to bring up which I think could be valuable. You have a valuable perspective on, which is since you're an incubator and you find these companies, you help them get going, really get them up and running. If I understand correctly, you also try to help them partner and get funding once they're ready, right, from other VCs and to continue running. So with these businesses, I want to split it into two things: software and hardware. On the hardware side, what is usually the milestone that is needs to be achieved by these companies to then be very attractive to raise their seed or series A round from your perspective? Because it's very important for founders, I think, in this space to have a clear vision of what they're trying to achieve, because at the end of the day, they're trying to change the world, but what are they trying to do in the short term? What's the sprint that they can work towards to get the funding they need to go to the next step?
Okay. Another very open question. You did say we're drawing to a close, so I'm gonna try and give you some more specific answers. I think you've heard every generalist answer about a VC from a VC about what they want to see, and you tend to find yourself in the space of the monthly run rates and that you've somehow demonstrated an MVP and that it works. I need to see more, and I feel the responsibility to give the venture capital market more than that, more granularity. I think that our sweet spot, just to clarify, is picking up businesses at the seed stage, whether incubation or even the pre-seed stage, working through them and getting the right metrics in place and milestones in place. And I particularly mean milestones, and I'm going to come back to that in a second. And then presenting it to our own venture capital fund. But by the way, we often lead, or we will definitely come in and boost a fund to go into that Series A and B space. But the kind of metrics I'm trying to differentiate it by software and hardware. So that's why I paused. But let me do it my own way first. So I think a really backable business, the ones that the VCs climb over to come and chase us at the end of our process, is maybe the better. What makes 25 VCs bid for a startup that comes out the back of the gateway? There you go. Can I answer that question?
Yeah, that's a good question. That's a better question.
Yeah, what makes 25 VCs bid for it rather than we have to go around and shake a can, or they do, for 6 months? So they have they've identified an addressable market. Obvious that in the case of risk, they have understood how to engage that market in a way that they've managed to either identify or reduce the risk of that audience. They have a working prototype that delivers, that shows that when the customer, that example I showed you of I discussed about the flood and the sample and how that worked. They did put a sensor. It looked awful in the early stages, this weather sensor, and it was totally hackable and all the things that could go wrong with it that everybody worried about at the VC level. But did it get people to change their behavior? Did the people want it? Did it solve a real problem? And could they target those customers? And they're likely to be good customers. Did they find everybody in a floodplain who was obviously going to lose? We were going to lose. Or did they find the rejected customers who were unfairly rejected, and this whole thing made sense for business? As in, could the investor be happy? Would the customer be happy? And will the insurer stick with this? Or have we stitched them up? When we've got those three things sorted, I know that we can get a VC to back it. And I know that we can get an insurer to underwrite it. And we can get the kind of global data owners, which are often inside Insurer too, to provide the data to scale those businesses. And when that moment happens, there's a noise, a crack of 3 yes, there's 3 yeses, and the thing just goes and it moves. Does it matter if it's software or hardware? It's the same questions, frankly. Sadly, for hardware, it takes a little longer to prove it, generally, and there's less people, because a lot of people are afraid of hardware. I'm not afraid of hardware. I think hardware is sensors, is primary data. So I love a bit of hardware generally.
Yeah. No, that makes a lot of sense. I think that's really helpful. I know there could be maybe more said there, but I wanna stop there. I think that's really helpful. Those three points. And I know again we are running out of time, but there is one thing I do think would be very valuable to get your perspective on, because not many people could have this, is given, I wanted to bring this up at some point in the show. Recently, we had news of in the US of State Farm halting home insurance applications in California, and then farmers insurance getting out of Florida. And we have these big companies that they need to make money, they need to continue doing well, and if they don't understand something, they're going to do this, right? They would continue to do it if they can make money, but they're really uncertain of the future. But with these new technologies, you mentioned that you got into this space because there wasn't as much innovation happening as you had hoped for. But now that you're working on these solutions to solve these problems, and that these insurance companies, these, we'll call them insurance factories, are facing, how are you seeing partnership with them? Because I know I have a friend of mine who actually developed a technology to prevent hail damage from, big box retailers, for example. And I know that the insurance companies were very interested in paying for this for their own customers, or kind of helping pay for it to prevent these massive occasions of damage and stuff. So I'm just kind of curious what you've seen with these insurance factories partnering with these newer technologies once they're kind of figured out, to either buy them or integrate them into what they do to help them win as well.
So very good question again. I'm pausing on that one, aren't I? As I think my way through I think in two things, that what's the natural relationship between these kind of mitigating startups and insurers? And I think that there has been over the last 5 years, since we started the Insurtech Gateway, there have been a number of kind of insurer labs that have outreach to the tech community. And I'm sure that the US, in fact, I know that the US insurers have done similar things as I've seen in Europe, where they have created an outreach where tech founders can come and pitch and talk to insurers about their problems and their client challenges. I think that has been, I think that has had some successes, and I think there's been some impatience because stuff isn't ready. It's not baked. So I think if you've got a fully baked idea and you've already tried and tested it, I think you can go into those kind of insurer-driven labs and accelerator programs, and you can effectively treat it like an enterprise sales environment, and you can present yourself to them. So I think in the market, if you look out, if you've got a solution, you can go to an Insurtech conference and put yourself in that lineup, and you see a number of startups coming who are quite advanced, who have had to self-fund a lot, have managed to find some probably family investment. They're quite well, or they're a group who have walked out of an insurance company, so they're well-funded people. So I think that group exists. I think there have been some bad stories about, I mean, generally there are a lot of ideas that aren't quite ready and aren't ready to be adopted by an insurer of that scale. And you can imagine that dynamic in anything where you've got a big industry player and basically an inventor, and having that void between the two. So I certainly was conscious of that void, and my business partners and I, when we designed the gateway, that we would somehow close that gap a bit. And so we know that we have to help turn what is effectively very inventive things into products that those guys know how to buy. They know how to adopt to them, because I think that we were giving them things that they sounded good and they were very enthusiastic, and there were lots of show and tells, and that startup tourism, that dangerous place where you're in 100 accelerators, and I'm sure your listeners have exhausted themselves from going from one accelerator to the next. But to find a way to actually develop a product in a way that they know how to adopt is a very difficult challenge in itself. It's as hard as trying to solve for the customer.
Hmm.
So
Yeah, that's helpful. I think I think it's very powerful. There's something I've noticed that is something a lot of people get wrong is that just it's so hard when you're an outsider in a space trying to solve a problem to get into the space that's existing, right? The kind of the incumbents, if you will. They have a way of doing things, and unless you're somebody who comes from that space and who understands the problems and has that innovator mindset, it's really difficult if you don't know how they do things, right? So you need to know how to package it because not everybody wants the same packaging, right? They're not all looking at things the same way. If you're a Silicon Valley tech bro, you're probably going to have to adjust how you work and sell towards insurance companies, right? They're just very different animals. So I think that was really helpful insight there. I know there's probably a lot we could do, but let's kind of close off things here. What is your call to action for the audience? What are things that you're looking for, and where people can reach you?
um, firstly, how you can reach me. Do you have show notes that they can find my
Yep,
yeah
absolutely.
web address and email address and things? But our URL is Insurtech Gateway. Insurtech is spelled insure without an e, INSUR tech gateway, insurtechgateway.com. But you'll find us in the show notes. And but who do I want to meet? And why am I talking to your listeners? Um, I would there are a combination of people I'd like to meet. I'd really like to meet impact investors. I'd like to have a round the table conversation with you and see that we have a really credible and plausible set of metrics to put together for a venture capital raise together. And that you should see us as probably a really effective way of investing in impact projects. And I'd love that conversation and to understand more about how you could help scale what we're doing. From a founder perspective, I am continually looking for opportunities to engage with founder networks. I've just been speaking with the Stanford Climate Group. I'm speaking with Carbon 13, who are an accelerator helping remove a gigaton as an objective. Finding ways of engaging with those groups and seeing. I'm just very willing to help share some of the tools, share some of the opportunities if that's useful. So if people can connect to me there too. Or if you're a founder and this resonates, some of these examples that we've discussed, and you're ready to go, you need either some expert, an incubator, and this could be a late seed stage. We can still help you. And we're willing to put our money behind our support. And I don't care if you're from the US, from Asia, from India, we have a very global view of this problem, and we're looking for scalable solutions that we can make together. So if you're a founder, get in touch too.
Absolutely, and I'll certainly be sending people your way that fit the bill. But no, this has been great. I know we went over a bunch. I appreciate you taking the time to do this, but certainly excited to see what you guys continue to do. I think there's as you know, again, there's a lot of issues in the world, especially climate change is really a scary thing, but there's so many interesting things to be solved, and it's a really, really great time and kind of era of opportunity, if you will, right? A lot of good things can come out of it. And it's really cool to see how all of the technological advancements in the past, 100 years or so that have been massive are coming together um, to really help people identify these areas of waste, right? Because in reality, almost every climate tech solution is just finding an area of waste, whether it's a cost center for all the damages caused by wildfires or something like that, or just things that people aren't even necessarily aware of because they're used to the cost, right? But finding those areas of waste and finding a way to mitigate that or get rid of it and put more money into people's pockets, help investors make money, and help make life a better place. So, very good. I appreciate you coming on, and I'm looking forward to staying in touch.
Thank you, Silas. Likewise, I really enjoyed it.